Welcome everyone. Good morning to Admiral Markets. We're going to take a look at live trading in this trading room, live trading of myself to be precise, and you'll see why I will be looking at certain setups and certain charts and explaining that with the use of Camarilla. That is the focus point of today. Before we do that though, the disclaimer here, important to mention that the material is intended for a global audience. It may not be suitable therefore for everyone. To get the corresponding info on charting conditions and other details, please visit admiralmarketsglobal.com. Select your residence, country of residence, and contact an appropriate entity. Also, the risk involved in trading in general and global financial markets and Forex in particular is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice, and the webinar is for informational and educational purposes only. By continuing watching this webinar, you agree with the disclaimer and the warnings mentioned here and admiralmarketsglobal.com website. And that's about it. So as always, thank you for both of these important messages. Forex trading is a lot of different aspects put together. It's finding a balance over a tightrope, and we have to maintain that balance, otherwise we will fall. And hopefully there's a safety net, but there's obviously the safety net in terms of Forex trading is risk management. Without it, we could lose balance and there will be no net. So the risk management is the safety net, but obviously we try to balance just like the tightrope walkers in the circus. We try to keep that balance as much as we can. It requires a lot of disciplines. Most traders focus on strategies and entries, and but that's why I have a quick list of things that you want to keep an eye on before you enter to make sure that the market is indeed what you would be looking for in a Forex currency pair. Those steps are trend, opportunity, filters, trigger, and entry method. All right, make sure to take a look at Admiral Markets in the social media. With that said, we can take a look at the calendar. The calendar is pretty important today. We had odd retail sales and a Bank of Japan press conference 28 minutes from now. But more importantly for today, and this is something we cannot really do anything about, and it's something that we have to respect and be cautious of, is the interest rate decisions on the pound and euro. And we also have dollar ADP figure. Odd, because normally that's on Wednesday, maybe because of the day off on Monday in the US. It's on a Thursday instead of Wednesday. So those are three major news events, of which I'm most curious about the euro interest rate, to be honest, whether they will inch it a bit lower yet again. But obviously the market could be very slow until these three get released, and we could see a lot of volatility and a lot of movement during and after these releases. So it's just going to be therefore a more difficult day to trade from an intraday perspective, at least. Also from a intra swing perspective, intra-week swing. Even maybe scalping could still be okay, but you would see probably very small movements. We also have a press conference, by the way, of the ECB. So with that said, you can see the last 3 days of the euro have been tremendously small candles. This is the daily chart, and we're looking at a Monday candle, Monday, Tuesday, Wednesday candles here, 3 in a row. Obviously, very, very small. The range of those 3 candles is hardly 50 pips, of which yesterday, though, did have a bit of a bullish bias to it. We did have some upside yesterday after a very mini kind of pin bar here on Tuesday. But a lot of momentum, a lot of movement in those candles. We can see there's not much movement, right? Now, what else do you see on this chart? Just in case you're maybe new in here, let me know, by the way, by using the chat, so that I have an idea if you're visiting maybe the first, second, or third time. What we have on this chart are two oscillators at the bottom. We have fractals, we have four moving averages, which is the 89 EMA and the 21 EMA band, which is high, low, and close. If you look at that, you see the 89 EMA coming in at 134.75, and you see the 21 band here at around 132, 132.50. The fact that they're red and purple means that it's bearish. The moving averages are bearish, and there's a pretty big gap between price and the moving averages. So what could happen here is a retracement back to the moving averages, in fact. All right? We've been away from the moving averages for pretty long. You have to realize about 13 days already. And here it was, let's take a look, about 16 days. So often enough, if price is long away from the moving averages, you see, it eventually pulls back to them, right? Here it pulls back to them. Here it pulls back to them. And here. So we could have another pullback, potentially. It's possible. We had two dips here on the AO, so that's one of the things I wanted to see. We're not there totally because we only have two green bars as yet, but it does look like we're forming kind of like that double bottom on the AO here, just like this had here. And we saw when that happens, the fact that we got a bigger retracement. So that something like that could potentially happen, but obviously anything that is said on the euro dollar, to be very honest, is so dependent on the news event. It's very heavily react to that. I mean, if they decrease the euro interest rate, it could break through 131 and start flying down to 130. So it's difficult to say. 130 though would be the next target, roughly speaking, because that's the psychological round number. So once 131 gets broken, that would be the next level to think about. But from this point of view, I wouldn't be surprised if we get some retracement. Now from this point of view, the hourly chart, you can see the retracement right in here actually breaking to the downside potentially. We're not there quite yet. Price is trying to break through the daily pivot point. It's trying to break through the moving averages. You see, this was a retracement yesterday, kind of built a triangle after that. Now trying to break to the downside, in fact. So if we do break through that trend line, if we do break through the moving average, then maybe we won't get that higher retracement. I was looking for retracement maybe, for instance, to, let me think, yesterday, I took it off, yeah, this fib, back to 131.80, for instance, or 132.25 at the 38.2 fib. Those were the two levels I was thinking about yesterday, but price didn't get there yesterday. Price just really didn't have enough muscle to push through. After our trading room, it did move up a bit, but didn't push up to that target I had in mind and built a triangle. So we'll have to see how the today shapes up. It could be very flat as well today, so we have to be a bit cautious. Today's focus is Camarilla, so let's take a look. But as I said, it wouldn't be probably appropriate for an intraday environment, but here are the intraday Camarilla levels, and we are between the H3 and L3. We're knocking on the L3 door, so if price, I should say, not we, but if price pushes through the L3, that could be the breakout for downside down to L5 target. But it's still 5 hours to go, so maybe it's possible to take a short, but you want to be careful that you close it probably before the event, maybe an hour before the event, in fact. Alrighty. Pretty choppy piece of price action here on the 15. 4-hour chart. Also be interesting to see if we can break back below the 21 band. You see In these cases here, the 21 band was used as a resistance spot, even this, but this was of course a major consolidation. The difference between the big blue box there and the blue dots is the fact that obviously the blue dots are just small touches of the band before you get followed through to the downside. And one thing why I think a retracement is still probably more likely is because, for instance, the 4-hour chart here you can see clearly on the move back, so I would expect a bit more retracement. However, in the long run, obviously, as I said yesterday, this is a strong AO, so still looking for follow through to the downside later on. Pound dollar, I'm afraid, doesn't make sense to look at Camarilla either because we have a pound interest rate. So only thing what we can do here is also long-term analysis. So bear with me, and we'll take a look at Camarilla and other pairs soon enough. But just give us a few minutes here. And well, the pound, very bearish fall of this trend line. Anyone who took that trend line break was maybe in our room because that's when we saw the break happen. And as I said yesterday, it was a good 2-to-1 trade there. So no one mentioned that they took it. Unfortunately, it's a pity. But that was a good breakout. Remember, that was that trade we looked at. So it still looks like a good follow-through potential. Why? Because we have a very strong AO. We just about went back to the zero line, but didn't get there quite yet. So, but I know it's very close. So this looks like a retracement has potentially been completed already. But here too, we could easily see retracement back to 165 too. So let's take a look at the 50-minute chart. With no divergence on the hourly, a breakout below L3 would normally speaking be a good breakout level. But in today's market, with the pound interest rate, it's riskier, and I wouldn't do it because of that, because we don't know how the breakout will behave. It could break by 2 pips, then move up and start going sideways. But normally speaking, without an interest rate, we would have a very good L3 break for L5, in my opinion. Otherwise, what can I say? It's just very bearish. Tuesday was a very bearish candle. Yesterday was slightly bearish. If there's any retracement, then we should see follow through to the downside, usually speaking. Here's a big bottom, retracement of the big bearish candle. Any stop loss above, for instance, this top should be relatively safe. Or let me say it this way, is probably the best level one will want to use. Otherwise, well, the weekly chart isn't finished yet, but obviously if the weekly closes like this, it will be bullish engulfing twins. So there's really nothing but bearishness at the moment. And the question is when and where more than anything, all right, in my opinion. So, Aussie. A very stubborn pair at the moment is Aussie. It's just bouncing between these two levels. And we might be bouncing again. We had a good 4-hour wick here. So if you use candlestick patterns, for instance, and you use support and resistance, this would be an interesting short of that 4-hour candle at 93.50 with a stop loss above 93.75 as a resistance bounce off of the top, with maybe a target. If you want to be conservative target, I would say aim for 92.86 or something like that. And you're easily looking at 50, about a 2-to-1 trade. Pretty interesting. That was a trade of the past, though. If you looked at the 4-hour chart, 50-minute chart, pretty tough environment because we got a weekly pivot point, daily pivot point, monthly pivot point. I'm not too keen, therefore, on taking breakouts to the downside right in front of pivot points. I'm not too keen of taking any longs to the upside right in front of resistance. So all in all, I think we can skip this one. Doesn't look like an interesting environment. Let's take a look at the Kiwi instead. The Kiwi is looking bearish still, as mentioned yesterday. We got a strong AO on the hourly. All we can see probably is a retracement of that AO, of that swing high, swing low, that bearish swing high, swing low. And the 38.2 fib has so far been the resistance spot. We've hit that spot multiple times. I am in a short myself from that level. Let me take a look exactly. I'm in a short from right in here, this spot, 83.30, right at the top. Tell you why. There was this yesterday, this wick here at the 38.2 fib. So that is a good, decent price action candlestick signal at a fib within an obvious bearish swing, after a obvious bearish swing high, swing low. Very strong AO as well. So when you get a signal like that at the 38.2 fib, it's always worth it to be look at it and keep an eye on it maybe, and maybe trade it. And what happened was that after that candle, we got a retracement of that doji, and that's where I sold it, right at the top of the retracement here. So it almost seems like I sold the 38.2 fib. Obviously the 38.2 fib was a factor, it's actually the trigger, but the entry was the retracement of the doji wick right there. Now ever since that, price has not gone anywhere, it's just going sideways. So even if you didn't take it, you have plenty of time still to pick relatively close to the top here. Now, of course, the question is, will we be able to break this zone to the downside? Even if we break it to the upside, it's probably going to bump into resistance for more downside. What you can do is not only put this bearish swing fib here, but also a retracement fib. And what you often see is the targets lining up with the retracements. So what you see here is that even if we get a spike up, the DR1, the daily R1 pivot point, the minus 272 and the 50 fib have a confluence. The daily R2, the weekly pivot point, the minus 618 target, and relatively close by the 61.8 fib also form a confluence. So even if it spikes up, those would be resistance spots. So if you took that short, I would recommend a stop loss probably above this top. Otherwise, if you want to use a tighter one, then I would probably go above the 78.6 fib, just in case it does this, which is possible. The other scenario is that this is downswing, this is a correction, and we start to fall and break. Now for that to happen, we need price to break through this triangle, basically, what is happening here. And break under that daily pivot point as well, and this bottom. Then we would have to break out to the downside. And we would see a follow through of the Kiwi to the downside. Everything on this 4-hour chart is bearish. The 21 band, the 89. There's a healthy gap between the 89 and 21. Price has consistently moved away from the band here, as you can see. Right? Drop, hook back, drop, hook back, drop, hook back. There was a bit bigger retracement right in here when we touched the 89, but otherwise, drop, hook back, and etc. I'm not going to repeat it, but yeah. So this could be one of those again. The bigger resistance, as I said, I would prefer a stop loss above this level because you got daily tops in here as well. And the stop loss is above the 89 EMA. if you want to be safe. How about targets? Let's take a look at targets. Daily chart broke through this bottom here. Another reason why, oh, actually I would have the stop loss. I have the stop loss. Let me take a look. 1 second, folks. Yeah, I don't have the stop loss above 84.07, but I'm using the 4-hour chart, but that's okay. If you want to go even safer, maybe, then above 84.07, because that's a daily pivot point. Anyhow, the target, conservative target probably 82-ish. Although we have 82.44 as a bottom here. Yeah, 82.45 probably. 82.45, that seems like a potential bouncing spot there. Alrighty. So that is a potential short. How can you jump in? Well, that's actually, you can use the Camarilla as a entry point. So in this case, the Camarilla is the last step that we're looking at. After doing all of that, you know, it looks good to me. If you not only the trendline break here, but for instance, the L3 break below 83.14, right in here, right? Not only breaking a trendline, but the Camarilla for that downside. L5 is 82.80, but I think there's more potential today when looking at other target factors, at least. So let's see. Edith says that she's in the short New Zealand as well. Great stuff. Good job. So I hope this one, of course, will move to target. Great job. So that's about it, I guess, from the Kiwi perspective. Kiwi, from a daily candle, very bearish candle on Tuesday. I think there's really nothing to add. You can see just by looking at the weekly chart, by the way, is that if you get a retracement of the weekly candle, you know, often enough that's a pretty strong thing to look at. Look at this retracement here of this candle. Then look at, well, this one didn't have, the next one didn't really have much of a retracement here. But the next one retracement, the next retracement, the next retracement, the next retracement, the next retracement. Every time it challenges halfway or the top of that candle, it's a pretty good level to look for shorts. If you had a short here, 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 and or even halfway here, you know, it's pretty interesting how the weekly candle can help. Dollar CAD is a pair I was a bit cautious of. Let's see, I was saying that we had a pretty good bullish candle on Tuesday. Yesterday was a retracement day. We did get a bounce off of Tuesday's low yesterday. You see that at 108.67. So that could have been maybe an interesting level to look for longs if you were looking at the dollar CAD. Yes, it did make a pretty big bearish move on the 50-minute chart, but if you keep an eye on that daily low, then maybe you wouldn't take a long right as price is falling, but you might want to keep an eye on, for instance, the lack of follow-through of downside, and you could use the time factor rule that I use for that. Hopefully you know that. If not, let me know. And that states that if 5 to 6 candles don't break a bottom, you know, you could be seeing a bounce. So let's count. This is 1, 2, let's take a look, 3, 4, 5, 6th candle. So right in here, you know, you might think, okay, we're not breaking any more to the downside. That downside impulse is probably over. We are close to yesterday's low. That's what you're thinking yesterday, maybe. It could be an interesting level maybe to take a long. That isn't doing too bad. So these are things you can think about when analyzing the market throughout the day. And at the moment, it's still a bit of a toss-up, this dollar CAD. We are above all these pivot points. The pivot points are smack in the middle. But we are above them. And it looks like a bit of a bullish breakout. So in this regard, I would probably be more interested in the upside, but right now, not right now. I would like to see some respect for the H3, but if we then break above H3, it could be a good bullish breakout. Not right now. We've already traveled quite a lot for the dollar CAD. Would like to see a bit of a dip before taking it to a breakout level. Alrighty, let's see. Dollar Swissy. Still not a big fan of this dollar Swissy because of the divergence. It's a single divergence, so maybe nothing spectacular as yet. But just not liking this structure so much. But we are getting a bit of a breakout here, also because the euro dollar is moving down, so it's the opposite on the dollar Swissy. Dollar yen. I think the dollar yen is a better one actually than the dollar Swissy because this is breaking a kind of a falling wedge bull flag pattern after a very, very strong move up. So this is looking like a pretty decent follow-through potential. So I like this. We got H3 right in here. So a long right in here makes sense to me. I don't know if Kaylin is in our webinar today. Let me take a look. Doesn't seem so. Okay. Well, Kaylin had a stop loss level in mind of 68. And at 68 would have survived it. It came very close, and I was a bit worried about that. That's why it went down to 73. So yes, 68 survived, but I mean, a bit too close maybe for comfort, really, with 68, in my opinion. 5 pips is obviously so close that could have been taken out, I guess. So we did see that bearish kind of pressure a bit throughout that day yesterday. Now we're getting a bit of a bounce, I would say. We have a potential double bottom. We are breaking through this resistance line. We are breaking through H3. So now I think, actually now today a stop loss at 68 with an entry here is something that makes sense to me. It's still a bit, obviously each trade has a risk. Are we in this bullish breakout or not? It's not as clear, but if you look at certain factors, I would say it's a decent probability because we got the AO back to the zero line. We got a very strong 1 hour AO. So there are, interesting signs of upside. We got very strong momentum. We got very slow bearish correction, strong momentum, very slow bearish correction. We've broken through pretty interesting levels like 104. What remains is 105.40-ish, that the bigger top, the bigger monthly top posted about end of last year, if I remember correctly. So that's still ahead of us. But with these signs and the AO and back to zero line, plus the fact that we're breaking through the 1 hour top here and we're making the moving averages go back into a bullish mode, I think there's a decent statistical probability that upside with a long somewhere in here, or maybe a bit even deeper, maybe a few pips lower, with a stop loss at that 68 level, or even below, a bit lower, maybe below the 61.8. I don't think it's even necessary, but with a target of 105.45, 44, for about 50 pips versus about 20-ish risk, 25 risk, so about 2-to-1 trade. I think with the probability, I think at least, I would say it's about a 50-50 at minimum. right? So then it makes sense because you get 2-to-1 back if the target gets hit, and it's about 50-50. Personally, I think it's a bit higher than 50-50, but even if it is 50-50, with the R2R in play, it's, I think, from that mathematical point of view, worth it. But let's see. Obviously, we never know for sure if a trade is going to work out, neither this one. It's still early. From a 50-minute point of view, it's still early due to the fact that the moving averages are kind of like intertwined here. So if you want maybe a bit more higher percentage, what you could do is wait for a bounce off of the trend line, wait for some signal that it's bouncing, and take that. Or even wait for the break of the next fractal here, getting a bit worse price, but a bit more confirmation as well. And at that point, the 50-minute world is already more bullishly aligned. So that's the advantage of waiting for the dollar-yen to, to show that bullishness first. So that's the idea of the dollar-yen for the moment. And I'm still long from yesterday, from 104.90-ish here from this zone. It's about break even at the moment. So let's see. Euro-yen 2 is making kind of a correction here, I would say. So depends how much what the euro will do. It too is vulnerable with the euro interest rate decision. We are getting some bearishness on the euro dollar at the moment, seeing a break of this trend line. But a break like that, I have little faith in because of the interest rate. Okay, that the market could prove me wrong, but usually speaking, the interest rate doesn't allow a pair to go that all too far. Pound yen is something that was interesting. Actually, someone I know mentioned this to me. Pound yen, a bounce off this top, basically, a bounce off the broken trend line, a bounce off maybe, for instance, if you put a fib, on this swing high, swing low, could be happening right here. Interesting idea. I like the potential, 61.8 fib. If you like that idea, one way of trading it is taking that fib, but the other way is using Camarilla. How? By using the Camarilla levels, for instance, by taking the H3 breakout instead of the fib, and putting the stop loss maybe, for instance, below the L5. Or if you want to use a tight stop loss, below this bottom. And depending which stop loss you use, then you can alter your TP. So from a Camarilla point of view, we are at a breakout spot to the upside. In fact, it's, in my opinion, a bit early. If you look at the moving averages, if you add the moving averages, they're bearish on the 30. They're bearish on the hourly, and prices in the middle on the 4 hours. So I wouldn't say there's a lot of confirmation as yet, especially if you look at the daily candles. That's a bit, the only thing that's a bit, not looking that positive is, okay, we have a potential support level, but daily EMAs are flat. This is bearish, this is bearish. So what we do have is some bullish bounce price action here on the 4-hour chart. So we are about 1 to 3rd candle, so it's on the early side for long here, but it certainly could bounce. If you want to wait for a bit more of confirmation, then I would say wait for a few more 4-hour candles and either wait for a break, pull back and go, for instance, like that. Alrighty. This is the euro odd, and it too, of course, has the euro in it. Still stuck kind of in this zone here. Bounce off the bottom again at 140. Can't break that 140.50, 140 level. So I would be patient on this. This is the pound odd. Let's take a look. Now it had a tremendous fall, so this was a pretty nice break. If you use trend lines, for instance, like this classical break, beautiful break, and that really blasted to the downside here. Now with the strong AO on the hourly, I would still be looking for more bearishness, but we are going back to the zero line here potentially, so we need a bit more time. We need it to retrace a bit more. But if it does that, after that it looks pretty well sweetly set up for downside again. Where could be the bouncing spot for downside? For instance, the 38.2 fib in the weekly S1, or even the 23.6. I would say max these two fibs. Now, after that, bearishness is likely, I would say, because of the strong AOs, as I said. How far down the 4-hour chart is moving down as well here. We can use various time frames for that. One could use the 4-hour chart for the conservative -2, -618 targets, but if you want to be a bit more aggressive, let's take a look at bigger targets on the daily chart, because what's happening is on the daily chart is the fact that we're breaking through this support bottom after breaking this bear flag. And what is the target of that? The wider target on the daily chart is all the way down at 173.20. The first one. The second one here, 168.14. Back down to the, well, this has the problem about the pound interest rate too, but basically L3 long looking sharp, or the H4 and H3 for downside. Let's try to find something that doesn't have a pound or euro in it. That's not going to be easy. I got a lot of those euro pound pairs actually. This is the Aussie yen. So the bullish mode, after breaking out of the ascending, maybe ascending triangle, otherwise just a normal contracting triangle or range. Anyhow, after a break of that, moving to the upside. I'm not too big a fan of this Aussie yen. -272 target is very close by, so no, not that interesting. Let's take a look at a lot of these pairs have, I hear it in New Zealand yen. That's one of the few that doesn't have it. If you have questions, by the way, let me know now, please. And we can take a look at those. Alrighty. So New Zealand yen, not as bullish as the Aussie yen. The odd New Zealand is going to the upside. So that is a bit of a, that explains the difference here. This does not look that bullish. This is moving up, but at a very slow angle. If anything, almost looks like a bit of a rising wedge. In that rising wedge, though, price did make an acceleration from this bottom to the top. And then made a falling wedge here. So, in that regard, maybe some upside, but it has probably limited space here in scope. 50-minute chart, though, would show an H3 breakout to an H5 target. Yes, it's okay-ish. I'm not a big fan of it. I'd rather probably look for something else. I just don't like the bigger structure, the 4-hour divergence between these tops, excuse me. And don't forget, the entire weekly chart is looking like a rising wedge, which actually just broke out of the rising wedge and is making another rising wedge after the breakout. So, you know, two rising wedges trump this smaller falling wedge. Let's see, euro dollar, pound dollar, we can do it, a recap later on. We started with those pairs, so I will save them for later on, okay? Because otherwise I would be repeating stuff for the others, but I will go through them. I just do it a bit later. Mark is asking, what is the preferred time frame to use Camarilla? I use Camarilla on a 15-30-minute chart, but you can put it on all charts. It's just that because the levels are on a daily chart, the levels would seem very close to each other, so it wouldn't be much of value, I would say. What I have done is I put the pivot points on the hourly, and I put the Camarilla on 30 and 15. But the 5 or 15, I think is best because the levels are pretty close to each other. So if you go to higher time frames, then the space between those Camarilla levels are getting smaller. You know, so it's more bunched up on each other. At 15, there would seem more space because, of course, the charts are more spaced out, relatively. Let's see, XAUUSD broke out of that support trend line, orange trend line, is hooking back and bouncing off kind of the 38.2 fib, which looks like a classical break and pullback. 38.2 fib, so I would be surprised to see a downside push again from this level right in here. We got a bottom in here, moving averages. Got a bit of divergence though between these bottoms. So that's something to be cautious of actually, and therefore the correction could go deeper. Same for silver, yeah. Looks bearish, there is a bit of divergence. How important that is, I'm not sure because this is a very bearish triangle here. Plus bearish price action. So single divergence may not be able to stop that. Let's take a look at the odd New Zealand. Potential bouncing spot here due to the strong AO. Bit of divergence, true, but the 4-hour is still building. So pretty strong bullish trend. And right at the moving averages, this could be a bouncing spot for further upside, maybe towards, for instance, the daily R2. Let's take a look at the 50-minute chart. Now, if this is not a bouncing spot, you might want to keep an eye on the H3. That could be the breakout level for the upside on the odd New Zealand. Odd Swissy, right at the top, I don't know, it doesn't look that interesting. Alrighty, I think that's about it. Let's take a look at the euro dollar and pound dollar, and then if you have any questions, otherwise after that maybe we will just take a look at what's going on and then close it. The euro dollar, it's in a bearish trend, but we have the euro interest rate. Same with the pound. That's a bit of a problem otherwise. Yesterday I was looking for price to go back to 131.80, back to 132.25, We didn't get there as yet. The weekly pivot point was too strong, didn't allow the price to go up there. Now we're getting some triangle, and usually speaking, a triangle break like that would be interesting shorting area. But the problem is that we have the euro interest rate, and a break like that could go nowhere. And all of that movement is dependent on what the ECB will be saying and the decision made, and whether we get a spike up or a spike down. It isn't a downtrend. However, we have divergence. So in fact, I wouldn't be surprised to see both of them. Either one could occur just as likely. But if we do spike up, then I'm looking at the 38.2 fib and the 23.6 fib, 131.80 and 132.25. Make sense to see rejection there. If we do move to the downside, the break of 131 would mean we have space to 130-ish. Pound dollar, same thing. Pound interest rate, bearish downtrend. It's not that much divergence though as the euro. So downside continuation seems even more likely. However, it doesn't mean that despite the fact that we have downtrend continuation potential, that price could make a retracement up to 38.2 fib or 23.6. So either those two levels or here too, the bottom basically for downside. But heavily dependent on the pound news, which of the two indeed work out. So got a good question here. Does pure Camarilla H3 L3 trading work? I don't know, because I use it for confluence. Maybe this is something you can ask Nennet if he does that, because it's Nennet's primary. I got it from Nennet. I'm using it because of Nennet, so and I like it myself. But I don't use it as a standalone tool. I use it as a confluence tool. So it's a great question, but I'm not the one that could answer it. So we, drop a note to Nennet, one of these webinars. He's always available he has webinars on Monday at 6 and Wednesdays at 6 and tonight at 6 with me. But great question. Tonight, by the way, we have useful webinar, I think. Join us tonight. We got optimizing your approach to exits, and I would recommend to go to that one because many traders focus on entries, not that many look at exits, so I think that it could be pretty good to catch up and do some catching ups to gain some ground on the exit territory of the trading plan and the business plan for trading. So join us tonight at 6 p.m. Central European Time, 4 p.m. GMT time. Otherwise, I think we can wrap it up for today. I don't want to waste your time. Otherwise, basically, in my opinion, it's all about waiting for those interest rates. And days like this, and NFP, by the way, are sometimes good days to not trade if you want to take a day off or two in a month, or once in a while. Then those are good days, by the way. So just that you know. So in any case, thanks for joining. Have a good day, good trading if you do trade, and I hope to see you in tonight's webinar. Cheers.